What's up, guys? It's Ray here with another video of financial statement analysis. We're going to be checking out another stock. So we're going to be continuing off from last time. I can't remember which stock we looked at last time. Let me just check. So I need to go to browse all German companies. Still in the energy sector. We've done E.ON, we've done Moldex, we've done Royal Dutch Shell, we've done SMA, and it's Uniper that we need to do now. So I had £1 and 42 pence invested in Uniper, and it's a German-based energy generation and energy trading company. The company operates through three segments: European generation, global commodities, and international power generation. The European generation segment generates power and owns coal, gas, oil, and combined gas and steam power plants, hydroelectric power plants, nuclear power plants in Sweden, a biomass plant in France, as well as the solar and wind power facilities. The global commodities segment bundles the company's energy trading activities as well as its gas storage and supply business. And the international power generation segment comprises equity investments in energy generation companies in the Russian Federation and Brazil. So CEO is Andreas Scharenbeck. It has almost 12,000 employees, which is really good. It shows it's a big company. It's definitely going to be a $1 billion company. Market cap is 9.68 billion. I would have expected its market cap to be a lot higher than that, but let's move on. P ratio really low, below 10, which I really like. Closer to 5, 6.62. Revenue this year 65 billion, which is over 6 times the market cap, which is good. The key figure though is the profit margin, even better net profit margin. Earnings per share is $4 a share. Let's check the share price. The share price is currently $38, so it's a decent amount. It's about 10%. 10% earnings per share. Dividend yield 4.35%, which is close to 5, which is the benchmark for what we're looking for, which is pretty good. Beta below the market average, which is really good. Financial summary. Over the past 6 months, or for the first 6 months ended 30th of June 2020, Uniper SA revenues decreased 41% to 19.98 billion, so it decreased 41%, which is a very large amount. Net income decreased 27%, 43%, second decrease. So a lot of the decreases, which is not very good. Now we're hitting the big part of the financial statement analysis, the net income, profit margin in particular, 0.93%, which is really bad. Let's check the previous years. And if you guys notice also, it's the latest year of the income statement that's been released is the 2019 year, which is not the most recent year. It should have at least the 2020 year, because we're in the year 2021. So it's 2 years behind, which is really bad. And I'm guessing the reason the statements have not been released, or at least there's a correlation between the statements not being released or them being behind with the profit margin being so low for the past 3 years. Anyway, going to the balance sheet, the debt to asset ratio is 73.98%, which is very high. It's around the same debt to asset ratio that Apple has. And if you guys aren't familiar with debt to asset ratio, it just shows the amount of debt the company has as compared to the amount of asset that the company has. So if you borrow a lot of money from a bank or from anyone, it's definitely most likely going to be a lot of interest, or there's going to be interest on the loan. So it's the same with the thing with companies. If they borrow a lot of money, they're going to have to pay a lot of interest. So that just takes away from their profit margin, and it decreases the speed at which a company grows. So lastly, the cash flow statement for 2020 shows that the net change of cash is 508 million negative, which is not good. Previous year is similar, 300 million negative. Previous year, 2018, 288 million positive. But even still, that doesn't cover the loss of the following year, 2019. Then again, the cash flow statement, as I stated in the previous video, if it's negative, if the net change of cash is negative, that doesn't necessarily mean that the company has decreased in value. The company might have used the Actually, no, sorry, I'm correcting myself. It doesn't necessarily mean that, because if you look at all the main three cash flows for cash flows for a company, which is operating income, invested income, and financing. You have to look at, for example, this company operating income was 936 million, investing cash flow was 220 million, and the financing is 1.4 million, 4 billion negative. This is the end of the story. Like, we kind of see financial statements as a story. You have the balance sheet, income statement, then the cash flow statement. The cash flow statement is the end of the story, and whatever's at the end of the story, if it's negative, it reflects the entire company. So if the last statement on the cash flow statement, which is the financing cash flows, if it's negative, as compared to, and the negativity of it overrides the positivity of the investing and or operating income, then the entire year of the company has been a loss. So thank you guys for watching, and I'll see you in the next one.